So the number one strategy at our office is to have a small business. Have a small business. That's it. I'm not asking you to quit your job. If some of you are great at something, you're an engineer, you're a dentist, you're a chiropractor, a lawyer, a doctor, a computer programmer, you drive a bus, I don't care. Whatever you're good at, keep doing it. But on the side, have a little small business. That's it. Because then what I can do on your tax return, here's your beautiful 1040 right here, and right here, what's this number in the bottom right-hand corner? Starts with an A. AGI. AGI, just your gross income. Any expense below here sucks. And Americans do this all the time. They pay taxes and then pay for stuff. Cell phones, travel, dining, entertainment. Coming out to clubs tonight. Mileage, auto, kids, spouse, the extra spouse. Southern Utah, baby. So anyway. I'm just joking. I'm a good Mormon kid. No extra wives. I don't need any more headache. So I'm going to hell. Okay, so now here's the point. We pay for stuff after tax all the time. And so what I try to do is get clients to move those expenses above the line. We call this above the line. And there's all these personal expenses that we can convert to a write-off above the line. Again, tonight should be a write-off. The fee you pay for tonight, your mileage over here, you might go out for a drink or get some dinner after, anything you ate before, your iPad, your phone, your cell phone service, your internet service, your home computer, home office, travel to go check on your business deals and projects. And there's so many expenses people just pay for after tax. I want to move them above the line. Let me give you a tip. If you haven't started a small business yet, you're still in startup mode. This is startup mode. It's a decision. You don't have to go file any paperwork. You don't have to check a box at the IRS. You just have to say, I'm in startup mode, damn it. I'm going to start a small business. You're going to start that lemonade stand. Let's say it's a little lemonade stand. So you're going to go out tomorrow and buy sugar. You're going to buy your Country mix. You're going to buy your, some ice and some signage and some cups and your cool, you're mixing it all up, right? And you go out. Are you in business yet? No, you're not even in business yet. What are you in? You're in startup mode. Tonight you can be in startup mode. You're like, I haven't found that cool property yet, but I'm out learning. I'm out networking. I'm out doing what it takes to get my business off the ground. I'm creating an entity maybe, or I'm setting up my business cards and my letterhead and my DBA, or I don't know. We'll talk about some entity stuff here in a minute. But that step of just saying I'm in startup mode, all your expenses you're incurring right now, keep track of them. I want them. In January, when I do your tax return, I'm going to say, give me all your startup costs. If you sold, when are you in business in a lemonade stand? When do you go in business? When you sell that first cup of lemonade. So one of your tax strategies today, before now and December 31st, is if you're in startup mode, sell a cup of lemonade. Make a little bit of cash. Do a little consulting. Sell a product on eBay. Buy that first property. You've got to bring in a little bit of money. You don't have to have a profit, but you've got to show that I was in business this year, that I could write off your expenses.